Hello and welcome to Trading with Technical Indicators. My name is James Boyd, and you know what Monday is. It's the green shirt day. Monday has actually been the best day of the trading day for 2026. Hopefully you knew that because I posted about it. And I thought since the bull market started with this green shirt, I'm going to continue to wear it. And so here we are on Monday. Let's see if that lucky Monday streak could continue. We got Barbara Armstrong with us in the chat. Say hello to Barbara. And we got Pia with us, Grace with us, Bill with us, GT, Alfred, Billy, and Silas, and many others. Zing 560. Welcome to all. Now, just real quick, today last week we really talked about continuation patterns, right? U's, V's, slightly W's, if you will, to some degree, cup and handles, continuation patterns, right? Today I really want to focus on bounces. If you said in your lifetime of trading or investing, how familiar do you want to be with bounces in an upward trend? Or what I really want to say is buying the dip. I think we could all look back and say, my gosh, if I would have just bought the dip. All right. So today I want to really talk about 5 dip setups in an upward trend. This is not something that you want to kind of be like have a C grade on or be mediocre at, because if you're trying to ride a trend or trying to invest or trade momentum, this is an area that you want to be like an A plus. You know it inside and out, and you know what your strategy is. Okay, so I'm going to talk about 5 dip setups. So first off, just remember that you can follow Barbara and myself and all of us coaches on X. We post educational content on X and also announcements. Quick heads up, I've posted a lot lately of some great data that I've actually found from other people that I follow. Make sure that you look at some of that data, especially the one on the SPX. If you buy on the high or consider buying on the high versus all the other days, some of that data is quite surprising. And also remember, when we actually discuss our examples here today, remember the information is provided for general informational purposes only. So also understand that some of us trade stocks or invest in stocks. Some of us trade options. Some of us might do a combination of that. We have IRA accounts. We have margin accounts. And so we might consider different types of investments given the account or our skill set or what we want to do. Remember that some investors like to trade direction. Some like to trade direction and time. Some like to trade direction, time, and volatility. Direction is not the only way to try to benefit from investing. This class is on investing, so we'll talk about investments. What a shocker. And those investments are different, okay? Now, also remember when we talk about examples, we will do those as examples on the Paper Money software application. When we talk about investing, it involves risk, including loss of principal. Without the risk, there is no reward. So when we also bring up our examples, we'll talk about the 5 examples of dip buying setups. And I'm going to use OneNote, Microsoft OneNote, for our example. Now, I'm just going to hop right into kind of these 5 examples. And then as we do this, I'm going to show the chart, okay, of a couple examples. So I want to kind of first write this out right here, and I'll kind of capitalize this. I want to kind of first kind of state what those 5 are. So now our focus again, let me kind of put it up here, is we're focusing on, okay, buying the dip. And so the biggest thing is we want to know the setups, okay? Now, what I try to do as an educator is I don't want to talk about something after it's already happened. We talked about cup and handle patterns last week because that's what a lot of things look like, and a lot of things have kind of shown that continuation. So if we're talking about continuation patterns, there could be a continuation of the trend, which means there could be the dip in the price. And when I say buying the dip, we're talking about the price, okay? Buying the dip, the price, okay? Now, first thing is when we talk about this, I'm going to kind of label this first one as old resistance, okay? New potential support. My gosh, if we said in our life, how many times have you seen a stock that broke through resistance and then, for example, and I'll make this big so we could all see it, okay? Old resistance, new support. So this actually means in this case that the price already, okay, broke up and now is pulling back. And the question is, where is it pulling back to? Well, maybe that old resistance level. Now, here's the thing. You can know this ad nauseum, but that's not what we're getting at. Show me the examples of how you practiced it. Oh, now it's totally different, okay? Old resistance, new support. Don't worry, we got some examples. And by the way, did a lot of stocks last week break through resistance? So if we kind of said what would be Captain Obvious as far as we better know this, well, it's old resistance, new potential support. Now, I'm going to kind of mark this. If someone was talking about the entry point could be, okay, resistance, old resistance, okay, new potential support, add 1 to 3%. What type of order would this be? Buy limit order. And it would most likely be buy limit GTC, okay? So we're identifying where was the old breakout, resistance. Could it be the new support? Let's say example given, easy math, 100. Well, if we're going to put a buy limit order out, we might say 101, 103. Why not at 100? Because you're imagining that it's going to come down perfectly. Why do you give yourself 1 to 3%? Because it's an area, okay? Now, if we said the second one, this second one is really kind of talking about the buying off moving averages. Now, one of the questions we get a lot is, well, which moving average, where's the support? Well, some stocks are using different moving averages as a level of support. If we're using something like a shorter duration moving average, like a 10, a 20, etc., you have more of a tilt of momentum. If that stock is using more of maybe a 30-period moving average, etc., you have more of a trend, a little bit less momentum, but there's a trend, right? So buying off the moving average, we need to identify which moving average. And I'm going to kind of write this down. So if we said, hey, stock using shorter term moving average. Well, if we're using a shorter term moving average, we got a situation of momentum setup, okay? The stock is going at a steeper tilt, and we're not having as much of a pullback. If using, let's say, 30-day SMA, we'll really kind of have more of a trend setup, okay? It's not to say it doesn't have momentum. It's just not going up in the steep tilt. Now, the same thing that we did before. Identify, okay, which moving average has it touched off a couple times, plural. And we're going to take it, let's say, add 1 to 3% off moving average or above. Buy limit GTC. So that buy limit GTC is saying buy if we get to that price or less. Now, are there any questions? Besides Nike is down a lot, which we've known that. Because we had a bearish vertical on it. Okay, now, if we talk about the third one just real quick, okay? This is what I would call the intraday price. Let's kind of call it this. Large green candle, okay? And why a green candle? Well, the large green candle, okay, maybe like a bullish engulfing, etc., maybe like a piercing line. Large green candle, and the middle of that green candle, okay, middle of that green candle, we call S1. Now, don't worry, I'm going to draw pictures of these in just a sec. The S1 is the middle of that green candle is known as S1. The open is S2. S equals support. Okay, just quick abbreviation. Okay, so if someone says, hey, I had a large green candle yesterday, and this is where we're looking for the intraday price action to drop. And to drop down where? Into the previous day's candle, which is a green candle. And it could drop down to the middle, or known as the S1, and it's a buy limit order, maybe right at that area, or right at the open of that. So you're identifying where the midsection is of that large green candle and putting a buy limit order right there, or right at the open of that green candle. This is really just more of a buy limit at those support areas. Doesn't necessarily have to be both. You might dollar cost average, but you're just identifying this is really a 2-day candle pattern. First day, green. Second day, intraday price flux. Now, you got to remember, to get the stock to come down to the support level, it's going to be a red candle intraday. Now, remember, I've been trying to kind of teach us here that red candles above moving averages, well, you know, as you're talking about new investors, which we've all been there, it kind of is scary because it's red. But we want the price to drop, especially if yesterday was a big green candle and the price is still above the moving average. Now, the fourth one, just real quick, we'll draw pictures of these, is classic hold, and the fifth one right there is CHE. Now, here's the deal. That close, so fourth is close above the high of the low day. Fifth, close higher gap. Now, when we talk about these examples, let me just draw some quick pictures. Quick. So if I said number one, we're really talking about something that kind of was, and let me kind of put a picture of the color here. Let's say the stock runs to the upside, right? And then it breaks to the upside and then pulls back down, okay? And it pulls back down to where it broke out from. This is what we're talking about as far as number one. If we're talking about, let's say, number two, we're talking about where something, I'm going to use a red line for the moving average, right? You got a moving average. If it's talking about a short-term moving average, momentum. Longer-term moving average, trend. And if we said, hey, I'm noticing a couple times this stock where it kind of falls back down to the moving average, runs back up, falls down near the moving average. And whenever we kind of get this, it falls down near the moving averages and notices some buying action near the moving averages. That MA, okay, I'll label that, is the moving average, and that P stands for price. Now, if we look at the third one just real quick, okay, when we talk about the number three, remember we said that was a two candle pattern. You get a large green candle, okay? And this midsection, S1, midsection, S2. And what happens is when you get the intraday flux down in the price, the investor is trying to say, look, I'm going to do a buy limit order right at the middle of that green candle. Now, you could know this and do nothing. That's not the point of this. The thing is taking what we learn and say, this is how I applied it. I got a paper money account to practice, and don't worry, we're going to get the practice in just a second. Or the buy limit order at S2. Same thing as the first. So you got to remember on that number three, you had a big green candle. You guys see any green candles in the last couple of days? Oh, that's funny. Okay. And we're using that red candle. Please come back down close to support levels so we can try to use a buy limit order to try to get in on the dip of the price action. Fourth, again, I'm just going to kind of bring these up. I'm going to just know 4 and 5. We're going to use it. We're going to show some examples on the charts themselves. Okay. Now, trust me, you're going to see examples of, I'm not going to have to draw it out because we're going to look at the charts itself. Now, here's the deal. If you said, I'm not very good at this, well, this is an invitation to get good at it. If you're not good at this, you're going to miss the trends. Okay. What's the purpose of the trends? To try to grow that capital. Okay. Now, let me kind of show a couple of examples that I think are kind of standouts of what we want to talk about. Now, I'm going to bring up an example. I'm going to go back to, now don't laugh when I do this. I'm working off a Dell computer right now, okay? And if I bring up Dell, now the purpose of this, when we talk about these dips, okay, I'm going to bring up, so first off, let's say I have, and I just have this chart up here, so let's use this chart for just a second. If I were to ask you which moving average is the stock using as support recently being in the last couple weeks, what would you say? Well, we haven't pulled back down to the red 30-day moving average line. We know that, so it's not using that. If we said which moving average is it using, it's using the blue line, which is the 10-day exponential moving average line. What did we say about that? Well, this is kind of more of a momentum setup. Now, if we took this to, let's say, a regular chart here, So you're going to kind of notice this bounce behavior. Now, when we kind of look at this, where it runs up in price, pulls back. That bounce, okay, those bounces where we kind of go from red to green, showing some buy action, runs up in the price, pulls back. How do we know where the pullback areas are? Well, we said that before. Orange, I'll send this chart out in just a sec. Orange is a kind of a consolidation, slight pullback. Purple, a little bit deeper. Price down below the short-term moving average. Price runs to the upside. Purple candle, a little bit deeper of a pullback. What does the purple mean? Price got down below the shorter-term moving average, but not the 30. Now, what type of color of the candles do you want? The answer is you would say, James, I would just take orange colored candles. Consolidation, minimal pullback. Purple, a little bit deeper pullback. Red, well, red for a reason. Price dropped more severe. So how do you know where the pullback areas are? If you start to see orange, if you start to see orange and purple, or purple itself, those are the dip spots that you're trying to say, look, I want to know these 5 dip setups so I could try to get in on the pullback to ride the trend. Now, let's kind of show this on now this chart right here, this is a trend candlestick chart, and this is also with that 10-30 period moving average. Let's go to a regular chart for just a second. So if you don't mind, I'm gonna change this, and I sent you that in the chat. By the way, if you're watching this on recording, I'll post this in the description. Now, wonder if you were to take this to, let's say, a regular chart. Now, by the way, with what we're talking about, could this also be something, is this only, let's say, and I might have to, let's just go back to the first chart. There, okay? Now, the point of us doing this is I'm going to zoom in like right here, okay? Now, the purpose of us doing this, now remember, when you see a large green candle, which dip setup are we talking about? Which one? Now, it's okay if you went back to your notes. We talk about the first one, okay? We talk about the second one. We talking about the third one. What are we thinking? Well, when we see that big green candle, we're thinking maybe could it pull back down to the middle of the green candle? Could it pull back to the open? Wonder if it doesn't pull back to those spots. Well, that's not necessarily a bad thing, okay? I'm going to put a marker right on that and see if we can't get a pullback to that. Now, I don't care whether we talk about number 1 through 3. Well, actually, let me say it like this. If we're talking about, let's say, buying on, let's say, number 1 or 2 or 3, you're really buying based at a price area. You're buying on the price dip down to potential support. And that's specifically true of number 1 through 3. You're buying at a price level. Okay? Now, how many of you like to buy at a price level? In other words, you're not waiting for gold. You're not waiting for CHE. You're buying on the dip of the price, counting on that the trend is going to pick back up. Now, if we look at this, what happened the very next day? It went up again. Now, all of a sudden, what happens the very next day? It comes down to that S1 level. Is this the biggest green candle or is this one? It's this one. So if someone said, James, I had a buy limit order, that could have been actually filled right on that day of 3-3, okay? So that's the first thing we want to know. Now, if we're looking for hold and CHE, remember that CHE close higher gap, that is a 3 candle day pattern. That is a red candle close higher day that is not a hold, okay? We're looking for the very next day to gap. Let's see if we can get a gap. The price does not gap the very next day. So you got actually a down day, red candle, close higher day. And if we're going to close above the high of the low day, which candle? Let's say identify the lowest, most recent red candle. It is right there. So if we're looking for an entry, I got to get a gap the very next morning, or I got to get the price actually get above, trade above that high or close above that high, the 150.84. Okay? So the thing is, you want to know what you're looking for. If I see a red candle, up day, that's not an entry, looking for the gap, up in the price. Very next morning, what do we get? We don't get the gap in the morning. We don't even get the hold either. We go forward to the very next day. What do we see? Now, on the right-hand side, what type of candle is that? Barbara, you're not allowed to answer. Yeah, so the comment from BJ is for hold, do we want to have it like 1 cent higher or have a specific rule like 1%? You know, I think if we're talking about, we used to say an example given 1 cent higher. Okay. I mean, that's pretty narrow, obviously. I mean, I think you could even say 25 cents, 50 cents higher than the previous day. I think if you were saying more, kind of saying you want more confirmation, 1% higher. Yeah, hammer. Now let's kind of go see what we got here. Very next day, it doesn't do it either. But what we did do is what? We actually have the lowest, most recent red candle is on 310. So if you take a look at that, we're not looking at the 150.84. We're going to move that down now. Okay. Now, if you take a look at this, slide that down. Let's activate that. I'm going to slide it down. Why is that? Because we have a new lowest red candle. Go forward to the very next chart. Okay. Now, all of a sudden, right there on that dot, what you're now going to see, there is a dot on the chart. And why did that dot show up? Well, we had a new red candle day, which was lower than that one. So this now becomes the high of the low day. The low day being the most recent lowest red candle. Now, Captain Obvious would be, wonder if you only get one red candle. Huh, that's easier. It's not harder. If you only get one red candle, that's it. What's the high of that day? 146.90. That's why the green dot's there. So if someone said, James, I'm buying on the bounce, well, if you're buying on number 4, that dip setup, there it is. This was, for example, the midsection of this green candle. That was entry number what? 3. If we're talking about someone that's actually buying a close above the high of the low day setup, that is entry number 4. Okay? So you could have had 2 entries. Now, does that guarantee that just because we bought those spots that it's going to go up? No. And notice that those trends take time. And by the way, when you talk about taking time, sometimes in investors, we can be so impatient. Is anyone else impatient like I am? How do I have 4 kids? I ask myself that all the time. Okay? I have no clue how I have 4 kids. My wife asked me, do you want to have more kids? Absolutely not. I already have plenty of them. Okay? A little joke there between me and my wife. I was like, I think 4 is good enough, honey. So, now, just real quick. So now what you're going to see in this case is it pushes to the upside. And so what I want us to kind of watch is when we get these, okay, red candles. And let me zoom back in. So now all of a sudden, there was the hold, right? There it is. And it goes up and it goes up and it goes up. And now you get a red candle. So you're thinking about the 5 dip setups. Now, Art asked me last week, what is the number 1 indicator, technical indicator? Price. The problem is that doesn't matter if you don't know where to consider to get in. What's the setup? Now, we're talking about the 5 setups here that every investor should know. And by the way, if it's on one handful, 5 setups, you can't forget it. So if I actually see that we just made a brand new high, the highest chance is what? A higher low. So all of a sudden we get a red candle. Now we already know that if that stock actually traded above that high, that would be our brand new trade above the high of the low day, close above the high of the low day. All right, so let's see what happens. We go forward to the very next day. What does it do? It goes up to right around 155.04. Let's say we could zoom in and see if it did, but it, for the most part, doesn't, right? Price falls down again. That's not going to change that line at all because both of those highs are within pennies of each other. So we still would need to get to 155.04. Go for it. What happens? Now, again, when you see a candle where you almost have to pull out our yardstick to measure it, you know that you're going really back to really number 3. Midsection of that green candle right around 152. The open of it about 146.5. Okay? Now, that day right there on the right-hand side, March 19th, there's your hold day. If you were waiting for the dip, there it is. If you actually said, hey, James, I'm going to buy it intraday, there you go. If you said, I'm going to wait to the end of the day, what does that mean for us? The last 90 minutes. If you said, James, I saw the big green candle, I'm going to look for that entry 3 setup, midsection of that big green candle. We'll draw it out to see if we get a pullback. Doesn't mean it always will. And if we look at that, we're going to be right around, let's kind of move that, and it's going to be right around 146 and change. We go forward to the very next day. Do we get a little pullback? And the answer is no. But what do we get? Well, we get an intraday high, and it pulls back. Now remember, if the red candles are above the moving average, we are not thinking that this is bearish. We're thinking that this is the stock the price going up. It's inhaling. When that stock actually has red candles, it's exhaling. Okay? Now, without that, you wouldn't have a trend. Without inhale, exhale, we wouldn't be alive. Okay? Try only do that one side. Now, the very next day, what do you see? Now, remember, once you see red candle, green candle side by side, and that green candle not above the highest, most recent red candle, that is actually what you call close higher gap. That is a 3 candle day pattern. Again, again, again. And so why do I say that again and again and again? Because what you'll notice, the fun part about investing is when you see patterns. And then what happens is you expose those patterns again. Now, why don't people see these setups? Their watch list is too daggum big. Take that watch list, go down to the Dow 30. Take that watch list, go down to the NASDAQ 100. Take that watch list, go down to the S&P 100. Looking at you, if you're thinking that you're going to look at 500 stocks a day, it's probably not going to happen. If we took the Dow 30, NASDAQ 100, S&P 100, how many stocks is that? Grand total? It's like 190 total. Okay? Now, that's not saying you're looking at every one of them, but you're probably looking at the top 100 on a daily basis if they're up. Okay? Now, if we take a look at this and we go forward to the very next day, what happens? There you go. Now, here's what I want you to do, okay? There's a couple stocks that I want you to look at in practice. So we're going to come to some trades now. But what I want us to do is a couple stocks that I want you to do for homework, okay? Now, we're not done because we're going to do examples now. But SNPS, ODFL, NXPI, TXN, okay? Rost, okay? And these are some examples. I want you to look, okay, in the last 3 weeks. And I want you to identify these 5 dip patterns on price. Can you spot them? Okay, so I gave you 5 stocks. Look and see if you can identify them. How far to go back? Go back to the 3 weeks. You should be able to circle where are they. Okay, do not go past go and collect 200 paper dollars unless you can identify these. Okay, now let's kind of come to some examples. Okay, now first off, any questions? Now the comment from Sam was Dell has major private equity buyers. You know, here's the thing. I don't think the spouse would care whether there is retail buyers, equity buyers. The spouse usually just wants, did the price go up? Okay, I'm not sure if let's kind of play a little joke with Sam. Sam says, yes, I did buy in paper money Dell, and he says, but the victory feels hollow because there was not above average volume, so therefore it doesn't really feel like a gain. You hear how ludicrous that sounds? Now here's the thing. When the price goes up, it went up, okay? It doesn't always have to have high volume, okay? It doesn't have to be a hollow victory either. Sometimes there is above average volume. We talked about that last week. Sometimes there's just average or less than average. And we talked about why. Now, what I'm going to do in this case is I'm going to go back. Now, you got to remember something. How many of you here today have different brokerage accounts? Now, you don't have to type in the chat. But how many of you have like an IRA, a 401k, a margin account, another margin account, maybe a grandkid account, son account? We have different types of accounts. All different types of accounts have different balances. Different balances might have, let's say you might say, I normally like to trade stocks, But in some accounts, I don't have high balances or higher balances to trade stocks. Now, the example, what I'm going to do is on, let's say, and I'm going to go to this one. Let's start with, we already hit Dell last week, probably 2-3 times, but I'm going to go back to just one real quick that's kind of showing us maybe a little bit of move, okay? Now, I'm going to kind of go back to like where we can practice together. So first of all, what do we see on the right-hand side? Well, I kind of see maybe, let's say if I kind of back this chart up, kind of a red candle. And that red candle kind of, we got past earnings. Now, many investors say, look, I want to get past the earnings, give it maybe 2-4 days or so to see if we can't get past the earnings and see what that trend is. Now, whenever we're seeing that red candle, we're not thinking, oh no, bearish trend, here we come, maybe, provided there's an uptrend. Feel free to look at this on the 10-30 moving average. I'll pull that up so just so you're familiar. If I looked at this on a 10, okay, so when you slow the moving averages down, the big fat red candle was right here. And where did it fall down to? Think back to, is it dip, buy, set up? 1, 2, 3, 2. That's the right answer. The dip by 2 is really just that stock bouncing off the moving average. Now remember, a whole moving average is the fastest moving average you could pretty much get. The exponential moving average is slowed down a little bit. Who uses the whole moving average? Well, people that like to trade momentum, okay? You could also trade momentum too, but just with a little bit slower tool, the exponential moving average. Now, when you look at that moving average that's slowed down a little bit, what you're now going to kind of see is it's trying to get a bounce. Now, someone bought off 305, okay? Someone bought off 305 the next day. Someone got within 1 to 2, 3% of that moving average and bought again. And now here's where we, let's kind of show this on the regular chart. So now let's kind of go back to those dip setups. So first off, red candle, close higher day. Now wait. Once I see red candle close higher day, what are we thinking? Think the next day. Does it gap up the very next day, or does it trade above the high of the low day? We already know where the high of the low day is, and we already know where's the open price. Where does it need to be? Well, if I go look at the very next day, where did we close? 309.95. Where did it open? The answer is 312.47. So if we said we wanted to open up a quarter more or 50 cents, that order would have filled. By the end of the day, well, middle of the day, rallied, closed back down, lower than the open. So you have to understand something. Just because you buy in on the morning, obviously it doesn't mean it's going to keep going up. But that's the setup. Now, we don't know what's going to happen. Let's go forward to the very next day. But someone could have bought right on the open. Now, go forward to the very next day. What happens? Now, let me go back for just a second. We see a red candle. Now, when I see a red candle, the only way that this could turn into a potential setup after a red candle is, are we buying off a price level? Maybe the old breakout level, new potential support? A moving average level, or are we trading above the high of the low day? Well, we go forward to the very next day. By the end of the day, at some point, that stock was trading above the high of the low day. And guys and gals, I'm telling you this right now. If you're listening right now, in 20 years from now, when I'm 39 again, we're going to be talking about the same things. And this is what's kind of exciting. A lot of times people say there's a lot, but it's a lot of the same thing that you're not realizing there's a pattern to. And it's over and over and over again. And it's kind of nice, okay? Now, if we take a look at this, let's imagine that someone said, James, I have $5,000 in an account. It's a margin account. It's not my 401k. It's not my IRA. And I'm trying to trade a trend in JP Morgan. Now, could someone try to buy some shares? They could. Or they might say, James, is there a way that I can maybe use leverage to trade that trend? Now, you got to understand, someone might go into their bigger account and buy shares. And another account, they might say, hey, I'm going to use something that has leverage to try to trade that move. Now, let's say in the current market, we said, we're going to go to the trade tab. And what we're going to do in this case is we're going to go to, let's say, the May. Now, I'm going to, in this case, going to go to the May expiration. Our cutoff point is if it has less than 20 days on the monthly option. Okay? We still got 25. Next week, we're going to be talking about the Mays. We'll be talking about the Junes. If we wanted to kind of say, look, I want to kind of do something in this case that has a higher potential upside, not as much probability based as a short put vertical, I'm going to right click on the at the money contracts, okay, the 315, and we're going to try to sell the 320, okay? Now, you got to remember something is, again, not every, people have different accounts. They might say in the bigger account, I'm going to buy some shares. They might. In a smaller account, maybe. They might say, I'm going to do a long call vertical. Long call vertical over short put vertical is based upon really, you want a higher potential gain, and you don't mind that the break even is higher than a short put vertical. This is not as much about time decay. That's the short put vertical. This is about getting the direction right. Now, if I bring up, let's say, confirm and send, trade number one here is going to be going long JP Morgan 315, 320. Debit, what you could lose given the vertical, 268. Okay? Now, if we take a look at this, so trade number one, JP Morgan. Now, when you look at this, if some of these bank stocks are actually going up, let's say like Goldman Sachs, etc., is this bullish for the stock market or bearish? If some of these financials are starting to go back up, is this bullish for the stock market or bearish? Bullish or bearish? Morgan Stanley. What about C? I mean, is this usually a bear market indicator if these are punching to brand new highs? Yeah, it's probably not bear market. I mean, if these hit brand new highs. Now, I'm going to bring up the second example, okay? Now, we know that Dell has gone up, and we know that's, now let me just say this. The one that's kind of been a little bit funny, let's piggyback off Art's comment, okay? No, Sam's comment, okay? So we got an example of Target. This one will be super quick, but we'll just tack onto it. We get a red candle, red candle. Now, remember, what is the question you ask yourself when you see the red candles? What's the question? I'm telling you right now, if you don't know the answer, what question should you ask yourself? This is why someone struggles with dip buying. When I say dip buying, we're talking about buying the dip of the price. Now, when we see the red candles, we're thinking to ourselves, which of those red candles are the lowest? Which one is the lowest, we could say? Well, we're going to mark that high. Now, first off, I'm going to imagine that we didn't even see the trend line and you're trying to buy within 1 or 3%. But I think you could probably say, James, that kind of looks like that second setup right there. Okay? Or that first setup. Okay? It's probably more the first setup because it checked back to where it broke out from. That breakout, one of the main areas was right around 118-ish. Now, let's say we didn't see that, and we see the red candle, we see it close higher day. A, we know, does it open up higher? Gap entry. 2, does it actually take out the high of the lowest, most recent red candle? So we go into the very next day watching the levels and looking to see indicators of price, confirming that. We go to the very next day. Does the stock gap the very next day? Now, here's where we get a little fun here, okay? What's the fun? Well, what you're now going to notice on this chart is when this stock actually broke out, okay, right there, you're now going to see that the very next day gapped to the upside. And maybe it wasn't 25 cents higher than open, but if you look in the middle, intraday, it went up, up, up. It probably would have filled a buy stop limit order. What did you also notice about this one? What did you also notice? Well, I think many investors said, James, I was kind of waiting for that midsection to come down to the middle of that or that. Could you have a couple dip buy signals, entry setups, on the same day? You could. A, we had a gap entry right in the morning. 2, intraday, we fell down within about 25 cents of the S1 entry setup. Okay, now in the chat, I got to know, how many of you feel like you've been missing or leaving some opportunity on the table. That there's some setups, but you're going out there maybe and like trying to look through all these different watch lists. My fear is if you're doing what I did, I looked at multiple searches and I would try to become a search professional, but I couldn't read the chart that was in front of my own face. It's not an issue of a watch list. It's an issue of reading the dip entry setups. Because if you knew the 5, you wouldn't need that many watch lists. Okay? So now what you're now going to notice is if we look at this and say, okay, what do we notice? You got a gap entry, which was the number 5. You actually got the number 3 setup, which is the midsection. And what do you notice again? Well, my gosh, we come down almost to the middle of that within probably about just a couple pennies of that. Could that have been another dip number 3 setup? Yeah, right at S1. You go forward to the very next day. Green candle again. Was there another gap? Doink. Was there a confirmation of that moving average crossover? Yes. Now we go forward. Now this is where you're saying, please give me a red candle so I could try to get in on the dip. And so far we don't have one. My point in bringing this up is in a trend, especially if we're talking about continuation patterns, these 5 patterns are probably going to play out over and over again. Now, if I showed, let's say, a couple more, I'm going to go back to Apple for just a second, okay? If we looked at Apple for just a second, you're going to see there's that long red candle. Now, hammers could be red or green. Now, we know that when we see the red candle, that is the setup, okay? We now see that stock, what happens the very next day? Close above the high of the low day. Go forward to the very next day. Green candle. Now, by the way, could that be an entry provided that maybe someone's trying to buy off the moving average like in dip setup number 2? Yes. And if they're trying to buy off the moving average, that's the dip setup number 2. And if you look at, let's say, go forward to the very next day, there's the red candle. The red candle is kind of resetting up that dip setup. Without the red candle, we don't get those pullbacks. Now, what we need to all do, everyone huddle in, okay? Stop thinking that you want deep pullbacks. If you're a bullish investor, you don't really want deep pullbacks because you want the stock to hold the momentum, and that momentum sometimes can cause those stocks to drift up higher and higher and higher and higher and higher, okay? Red candle, resetting up of the higher high, higher low. We already know we already know what we're looking for. Do we trade above that day's high, or do we start to get a close higher gap? A hold setup. Did you get 2 red candles? Which of those 2 are the lowest? Well, it's going to be this one. Well, if I look at that one, I just need to trade above 260.16. Let's go forward to the very next day. Click, bang. All of a sudden, what do we see? Well, we traded above the high of the low day intraday. And if someone was using a buy stop limit order, could that order have filled? Yeah, it could have. Could it have filled the previous day as well? Yeah, it could have. If you said, well, so that would have been an entry set up there, number 4, or it could have been number 4 the very next day. Okay? Now, in your lifetime, type in the chat, how many times do you think you're going to see this? So I'm only interested in teaching stuff that's applicable and something that is a principle, which is timeless, and a practice, which is timely. Okay? And now what you're going to notice is red candle, green candle. So sometimes these pullbacks, they don't last very long. The very next day, trades above the high of the low day, doink, the very next day. You go forward to the very next day, it's still going. So I gave you a homework assignment. Now remember, okay, how many dip entry setups? 5 main ones. I want you to know this inside and out. You need to know it for yourself because if you're trying to ride momentum or trend, it's really going to come down to you know these 5. Okay? Do you know these setups and you feel comfortable in practicing those? Notice we talked about order types, buy limit orders, pullbacks to a price level. Notice we also said the language of buy stop limit order, right? Get in if it gets to this price or higher, and then there's a cap, buy stop limit order. So notice how some of these things we've taught in the last 2 weeks are going together now. If we're in a market of continuation, we're probably going to be seeing these setups. Now, as you're looking at the markets by yourself, I mean, it should just be dawning and the lights just starting to, my gosh, it's the same setups. So it's not that the setups aren't there, is the investor or the trader ready? Goal here today was to actually help you be ready in seeing those setups with order types and being comfortable to practice trading those entry setups. I'm out of my time here today. We got Cameron May coming up next with cover calls and short puts. Thanks to Barbara for answering those questions in chat, and thanks to all of you as well. I want you to go out. I gave you the homework assignment, gave you 5 stocks to actually look at. Go back the last 3 weeks, and can you identify, there's 1, there's 2, there's 3, there's 4, there's 5. How many times can you see it? If you don't do the homework, do not pass go. You will not receive $200 of paper money. Just a little fun there, okay? Now, with that said, remember with what we talked about here today, we talked about the indicator being the price. And it's a piggyback of what Art asked on Friday. Now, remember with what we talked about, all investing involves risk. Without that risk, there's no reward. Be comfortable with taking that risk. That's for you, okay? You get to decide that for yourself. Also remember that with what we talked about here today, this is a class that's been recorded. We'll post this. That way you can have it as well. Thanks so much for your comments and your participation. And be prepared. Can you see these 5 setups? Stay tuned for Cameron May coming up next. And don't forget to subscribe. Take care. Bye-bye.